Hello, this is Andrew from Trend Following Mentor, and in today's short lesson we're going to talk about the Japanese yen, how to trade the Japanese yen. You can do it on a day basis, you can do it on an intraday basis, you can trade the FXY as far as the ETF, or you can even trade the futures. The whole idea is that you need to trade with a plan, and this is what I teach at Trend Following Mentor. I also want to tell you that I have a book coming out shortly. It's called The Bible of Trend Following, How Professional Traders Compound Wealth and Manage the Risk. Love for you to pick it up, and it'll help you become a better trader. That's my goal. We're going to talk about the yen. And as you can see, the yen is in this very deep drawdown. Or I'm sorry, not drawdown, but going in a downtrend actually. And it was signified by the MACD in very simple indicators. First rule, what you always want to do is you want to identify the strongest markets and the weakest markets, and you can do that with actually a rate of change, and you can average that rate of change to smooth it out. But what would happen here is you can actually see the trend breakout. You would have actually from this point, this is the lowest low, actually I did a little bit higher, a breakout of that bar, and you would have stumbled into an amazing trade. But let's say you missed it. There were periods here that you could have actually jumped on board. You could have drawn a support here and a resistance here. It's a very low risk bet from here, from the lows to the high here, and everything else was going your way. The MACD was negative. You were below a moving average. And actually in yesterday's video I discussed this trade, that the yen was having problems taking out the prior day's highs. And what I do is I mark this. This is also, just to point out, this is a 60-minute chart. I mark out the highs and the lows of each of the prospective days. And when the trade struggles, like it did here, and it couldn't take out these highs and attempted again and then failed, really easy thing you could do, and actually this is a pattern where you have a high, a low, and then a failed high. You could put in a sell short stop right here, and then your risks would have been slightly right up to here. And again, the momentum was still negative and going downwards, and we're still going down in the yen. I mean, I don't really know what will happen in the future, and you have to take it day by day. But the idea is that you trade with the plan. You know exactly what you're going to buy or sell. You want to buy the strongest. You want to sell the weakest. If you can put on a low risk bet. A low risk bet means that you're risking no more than 1% of your account size. And also believe that anything can happen, that you will have numerous trades that don't work or losses. The fact is also that things can gap up against you. You can have limit moves. So that's why you need to trade with stops. The other issue too is you need to watch your sectors. And you don't want to go too heavy into any sector. Like you don't want to be, let's say, both long or short the Swiss franc and the euro dollar, or when you're talking tech stocks, you don't want to be all heavy into any particular sector. You want to be diverse. What I do is I max out at a certain percentage, about 5% of my account size I max out in a sector. And then the other thing is too is you have a limit on your equity on the whole day. What's your maximum risk if everything goes wrong? And there will be days that things go wrong. Again, this is Andrew from Trend Following Mentor, and my goal is to teach you how to become a better trend follower, and I invite you to pick up my book, The Bible of Trend Following. It's going to be out in December of 2012, and you can also read the foreword of the book by David Drews. It's written in unscribed, and I thank you for your time.